The first thing I want you to do is stop doing this. This is the 5-minute chart of Bitcoin, and it's all drama. I want you to zoom out and get a proper perspective. Stop the drama of Twitter of, oh my God, it broke 100,000. It's falling below 100,000. It's fallen 10,000 points, and then it's going back up again. All of this is the wrong way to trade crypto, to capture that opportunity to unfuck your future. So I'm going to show you the big picture.
The foundation of Raoul Pal's advice for navigating Bitcoin's unpredictable market lies in perspective. The banana zone isn't a passing market fad. It's a phase fueled by the interplay between liquidity, sentiment, and economic conditions. Pal urges traders to avoid getting lost in short-term noise and instead focus on the larger patterns. These patterns, he explains, hold the key to maximizing gains while minimizing emotional pitfalls.
Global liquidity is the driver of crypto assets. And for vast periods of time, they actually just mirror global liquidity. When you get into the speculative blow-off season, it actually tends to decouple to the upside because these are exponential assets. But right now, we're still in the point where they're highly coupled. So in September, we showed this chart and said, the first leg of the banana zone is coming.
Understanding the importance of liquidity is essential to grasping the dynamics of the banana zone. According to Pal, Bitcoin and crypto markets closely mirror global liquidity trends. As liquidity increases, crypto assets tend to surge, entering a phase of dramatic price increases. This first leg of the banana zone represents the early stages of a broader movement, where institutional and retail players position themselves for exponential growth.
You should be expecting at least another 4 or 5 of these over the course of the next year. They're just regular, but for some reason that people are losing their minds. But once that's out of the way, usually it should be good. Now, liquidity needs to come back, so we need to see the dollar weaken. We need to see rates come down somewhat. Those are key things for us.
In the midst of the chaos that defines crypto market cycles, Pal highlights the inevitability of corrections. These pullbacks are not signs of doom, but rather healthy pauses that reset the market for further growth. Key indicators like a weaker dollar and falling rates set the stage for liquidity to flow back into the market. For Pal, these moments of volatility are opportunities for the informed investor to hold steady.
So the banana zone lies ahead. I've given you the playbook. You can, if you play it right, unfuck your future with a banana. Ride the banana zone with me. Follow the don't fuck this up rules. It's all to play for.
The banana zone isn't just a quirky metaphor, but a framework for approaching crypto investing with clarity and purpose. Pal emphasizes that by adhering to foundational rules such as diversification and patience, investors can make the most of this rare market phase. He likens it to a playbook, a guide to navigating the ups and downs while focusing on the long-term picture.
We've just started the banana zone. We've had the boring zone. We all suffered that. We had a big boring zone this year, much like the 2012 boring zone. We've just started. Now look at the beginning of each one of these. There's this little wiggle, which is the correction that happens in January. Great. It means nothing on the chart.
Pal reflects on the cycles that have defined Bitcoin's history, drawing comparisons to past years. The boring zone that preceded the current banana zone is a reminder of how the crypto market ebbs and flows. As the current cycle takes shape, Pal reassures investors that early corrections are not just normal, but expected. For him, these dips are just minor wobbles in an otherwise upward trajectory.
We've just broken that part of the cycle. So this is the start of the banana zone as we start accelerating higher. Going back to liquidity, here's global M2. You see, global M2 does this a lot. It also wedges. I love a wedge. They're the best chart patterns in the world. And what happens is it has a break higher, then this consolidation. It's happened every time we've got to the banana zone period, the kind of US election cycle, stuff like that. So we've done that. We've corrected the breakout. Now, global M2 is actually driven by the strength of the dollar. Now, the dollar has started to weaken. We expect it to weaken going forwards. And that will then reignite the next phase of the banana zone as we start bouncing higher.
Pal underscores the role of liquidity trends, particularly the global M2 indicator, as a reliable predictor of crypto performance. As the dollar weakens and M2 strengthens, these signals point to an acceleration in crypto growth. Each phase of the banana zone builds on this momentum, layering technical patterns with macroeconomic underpinnings. For Powell, the data is clear. The ride is far from over.
You already know that I have identified that global liquidity is the driver of crypto assets. And for vast periods of time, they actually just mirror global liquidity. When you get into the speculative blow-off season, it actually tends to decouple to the upside because these are exponential assets. But right now, we're still in the point where they're highly coupled.
This statement crystallizes the central theme of liquidity's influence on crypto. Powell emphasizes how the correlation between liquidity and crypto assets evolves across market phases, with exponential assets like Bitcoin leveraging liquidity-driven momentum. As we enter the next stages of the banana zone, understanding this linkage offers critical insight into predicting market trajectories. As we've journeyed through the intricacies of the banana zone, Raoul Pal has laid out a blueprint for navigating one of the most dynamic and potentially lucrative phases in Bitcoin's history. We've learned how liquidity fuels crypto market growth, how corrections are part of the process, and why maintaining perspective is critical to long-term success. Pal's insights remind us that while crypto markets can seem chaotic, they operate within predictable macroeconomic cycles.
Breathe a little bit. Go and touch some grass. Stop hyper-focusing on the 5-minute charts. Stop all the noise on Twitter. Just relax. Ride the banana, and you'll unfuck your future.
With the banana zone in full swing, how do you plan to approach this market cycle? Will you play it safe, ride the wave, or take calculated risks? Let us know your strategy in the comments below.